and I am here with Marcel Antohe from Acumen Finance. Welcome, Marcel.
Oh, hi, Moni. Thanks for having me. And if I can say a few words about myself, is that I'm a commercial finance specialist from Acumen Finance, and I'm based in Hertfordshire, Hemel Hempstead, the Watford area. We are doing a lot of, helping our clients to get finance for their projects, ranging from standard buy-to-let, HMOs, development finance, bridge finance, all sorts of finance that is needed for property projects.
Sure.
I am also doing some business loans, so helping SMEs to get business loans. And now, due to COVID-19, there is this government scheme, CBILS, which is Coronavirus Business Interruption Loan Scheme. And we can help clients from this perspective as well, especially because this scheme is helping the business owners to get their loans under very good conditions. For example, the key points are that you can get these loans for up to 6 years, and the first 12 years are interest-free. And then you can have up to 12 months payment holidays as well. So it's a good scheme for business owners that has been affected by the coronavirus this year.
And from the like for a specific business, what is the criteria that you can use to apply for this loan?
The criteria for this loan is, the big criteria are that businesses has to have a turnover of up to 45 millions. The maximum you can borrow is the 25% of the 2019 turnover of the company, or double the wage bill of that company. Also, business borrowers need to be, happy that they don't need to provide personal guarantees for up to 250K, because this scheme is backed by the government up to 8%. And initially, when the scheme came into the market on 23rd of March, it was at lenders. I mean, the lenders could have asked for personal guarantees for up to 250K as well. But now, as of 3rd of April, they take out this requirement as well. So it is a good way to recover the business.
Just to recap, the criteria is 25% of your 2019 turnover.
Exactly.
Maximum, or the double away of your 200% of your wage bill.
Yes. Yes.
That's the maximum loan you can get. No PG required. First year you don't have to pay any interest, and then after that you have to pay how much interest after the first year?
The interest depends from lender to lender, because there are again high street banks who are dealing with this, but they are dealing with existing customers mostly, and probably they had the best interest rates, but also they are the slowest in the process because they are dealing with so many requirements at the moment. And but there are specialist lenders which probably for higher interest rates they can speed up the process for you. And is basically on the same interest rates as normal commercial loans. But the key points are that you don't have to pay 12 months the interest, and then you can have up to 12 months payment holidays as well.
After the 12 months as well, after the first 12 months.
Exactly, yeah.
2 years potentially of no interest payment.
Yeah. So that's why it can be a boost for businesses at the moment. The downside of it is that it takes quite long, because at the moment it was a lot of confusion regarding the criteria, who can apply, the eligibility and stuff like that. So
yes,
it can be lengthy. I mean, for businesses who need the money right now or next week or in 2 weeks' time, it can be quite challenging.
Right. So thank you very much for that. Was very useful. Now, the main question I want to ask you to kickstart our Q&A is, With your existing commercial loans that were being processed when the COVID lockdown kicked off, or in March, what are you finding with those existing loan applications? What are the lenders doing? Are they going through with it? Are they taking much longer? They've reduced their loan to values. What are you generally finding on those existing applications that are in or under process right now?
Of course, as all the businesses at the moment has been affected by the COVID-19, the lenders as well had to find solutions to go on with the existing application, and also because they are willing to lend money with taking new application for loans. The existing ones, the most challenging issue was the valuation, actually. And most of them, they tried to overcome this issue by doing remote valuations or desktop valuations or AVM, which are automated valuations model. Of course, for some, if you don't meet their criteria to get desktop valuation or AVMs, those applications are put on hold until the physical valuation would be able to take place. So yeah, probably at the moment this is the challenging situation where the surveyors cannot go out to visit properties, basically.
If the valuation has already happened, then it's no problem, yeah?
Yes, exactly. They are going ahead with the existing application. As long, I mean, the DIP, yeah, the decision in principle is valid for 30 days. But for example, if you go out of that period, they need to reassess basically the situation, and eventually they might ask for other documents as well.
Okay, so what's AVM? Or is it based on comps or comparables, or what is it?
The AVMs actually are using the comparables in the area, but you see, some properties, they might not have comparables in the area, so it might be difficult to get an AVM for that one. If the lenders, because now they are looking more cautious at every deal, they are looking at affordability, experience, and they lower the loan to value. And sometimes they withdrew some of the products as well. So it's case by case, let's say. So if you go in front of the lender with the case, they're going to look at all the aspects. They are more cautious now, but that doesn't mean they don't want to lend. So they are still willing to lend, but they will take more precautious measures, let's say.
Just criteria has changed, basically.
Yeah. I mean, for example, and I have a few examples with some of the lenders. So, for example, Aldermore, they are still doing the commercial BTL for 75, for example, 75% loan to value, development finance for 60% GDV, loan to GDV, or 85% loan to cost. Paragon, for example, they don't do short-term loans, but they do BTL, accepting desktop valuations. And Precise, for example, they do BTL, they still do BTL, standard BTL, but for up to 60% loan to value. So that's why I encourage all our clients, all the property investors, to use a broker, because we have access to the whole market. We can assess the market, we can see which product can be used. Then we put it in front of the clients, and the clients can choose depending on their needs, their goals, and their approach to that project, basically.
Okay, that was very useful, actually. So let's say, because, as you know, I'm a small developer. Yeah. Up until now, I've been focusing on the current and existing portfolio. But let's say in a couple of weeks, I'm ready to look at new deals, or new deals are coming to me, then I will obviously have a look at some of them, which look interesting. Is it a case of that we can still send these new applications to the lenders? They are still looking at it, or some of them have stopped looking at new applications?
If you are talking post-COVID, definitely they will come with solution to do it straight away, and I can see a high volume of application post-COVID or post-lockdown, let's say. because all the investors are going to try, you know, to get their new deals, you know, that they already have in the pipeline, and to move on with those applications. If we talk about the pre-existing application, definitely, as long as the lockdown is going to be lifted up by the government, probably they're going to send the surveyors on site. So as long as they can get the physical valuation of those sites, definitely they're going to move on. And this is how I see it. Post-COVID, I think, is going to be very good, because the lenders gonna come back with products on the market. I'm sure the loan to value is going to be relaxed again, but probably it's going to take a while, because they need to assess the market as well. And as I said, they're going to look at individual cases on a case-by-case basis, basically.
Okay. And are you finding that some of your existing clients are actively looking for deals, looking for those distress sales that might be coming through, or they're currently staying away from that for now?
At the moment, my existing clients, they are trying to reassess their portfolio. They are trying to reassess their strategies, for example. And if by now your model might be to buy, refurbish, and sell. Now it might not be a seller's market, so they need to reassess their situation and to try maybe to keep those units and to rent it out to make a little bit of cash flow on those, and to keep it until the market is going to pick up again. Now, regarding with the market, in the last month, I haven't seen, myself personally, I haven't seen a significant drop in prices. Probably is going to happen in the next few months, but at the moment, I haven't seen a drop in the prices, although I can feel that the sellers who has their properties on the market for quite a long time, probably they're going to be willing to reduce their prices, their asking prices, and depending on how motivated they are, I'm sure there are deals out there that property investors can get it actually, for a good price. And as we all know, you make deal when you buy it, basically. So that's why I think it's going to be a good perspective for property investors, experienced investors, and not only to get great deals for the right price, let's say, or maybe below market value, and then keep moving with those developments or buy-to-let or HMOs, whatever your strategy is. And again, in these difficult times, the clients were looking to get the mortgage payment holidays, which is a good way to do it in the short term, because it will help you with the cash flow. And although the lenders are saying that your credit score won't be affected, I wouldn't be that sure that when you try in the future to apply for new products, for new mortgages or loans, the underwriting, process might find that you had difficulties at some point. So I only recommend my clients to take those payment holidays only if it's absolutely necessary.
Yeah. I mean, look, I have taken a couple of payment holidays on mine, but we've had a few HMO tenants leave, so I think it was necessary to do that. And I potentially won't be going back to the same lender for a while, because I might not be doing HMOs, in the near future, only development. So
this is exactly what I'm saying. You see, as in your situation, everybody is assessing their own strategy, their own portfolio, and they see exactly what they need for the short term and for the long term goals, actually.
Yeah. So in your view, post-lockdown, the market will stabilize. Hopefully, some of the criteria that's currently in place will be relaxed. So, it looks fairly positive, right?
I am a positive person anyway. So, but talking to the lenders, because we get updates daily, weekly, and every time they come with the little changes or bigger changes. So that's why I can see why is the lockdown is going to be lifted up. I can see lenders coming back on the market with more products, better products, and maybe increasing again the loan to value. Now, with this situation where the loan to value is not that high, I would say probably is a good thing even for the investors, because you are not geared up that much and you are not over leveraged, you are not overstretched. So probably is a good thing as well. Depends on how you look at it. And
I agree, and there'll be better cash flow, right? If you're going to be lower leverage, you'll have more cash flow on the asset. So now I think it really comes down to finding the equity for the deal, whether that's some of it is your own money, maybe teaming up, a joint venturing with another investor, doing a joint venture deal potentially, or getting a loan, a private loan. Because at the end of the day, look, there's no banks are not giving you any interest on your savings, what 0.1% a month or something. So it might be an opportunity for landlords or developers to come and team up with other people collaborating. I think is the key of the game.
Absolutely. This is the way to go forward. And I keep saying since all these situations started that in difficult times is opportunities times as well. So my suggestion is to still search on the market, keep in touch with your agents, do your marketing direct to vendors, try and find deals, and then definitely you will be able to raise private finance, maybe from investors, from angel investors who maybe just want some return on their money, and to be hands off. And also, when you look at the JV partnerships, probably is good because you can leverage everyone's experience, you can leverage the money, you can leverage the knowledge. Yes. So basically, I really think this is the way to go.
Yeah, I think that's a very good piece of advice, actually. And so it seems like there's a lot of positives. So if you can get through these challenging times, hunker down, revise, I think, reviewing your portfolio, revising your strategy, and maybe reinventing your business might be the way to go forward.
Exactly, because as we saw lately, service accommodation, for example, service accommodation industry has been affected, but some people find a way to overcome this by, I don't know, renting out to NHS staff. So yes, that's why you need to look at your portfolio and twist it by the needs of the market at the moment, and probably temporary, but this period of 1 or 2 months made many investors in service accommodation probably to get out of the market, especially the ones with rent-to-rent deals. Probably they handed back the properties to the landlords. But as we said, there is always solutions. We just need to be positive and to focus on solutions rather than on the problem. And regarding deals, I'm actively looking for deals myself in the area. We have something in the pipeline. I'm glad you managed to see one of the sites here in Hemel Hempstead. I'm still keeping in touch with the agents. I'm getting updates. But until the lockdown is going to be finished, when we physically can go again for site visits and bringing builders on site to get appraisals and stuff like that, I think is a good way to do research, due diligence, and to reassess your portfolio at the moment.
Yeah. I think very good piece of advice. So Marcel, if somebody wants to get in touch with you, how can they reach out to you?
Of course, I'm on all the social media platforms. I'm on Facebook. I'm on Instagram. I'm on YouTube as well.
So email address, because that's also very important.
People So my email address is marcel.antoje@acumenfinance.co.uk. Probably we're going to put the contact details in in the link, and people who want to get on with some new application or even advice or suggestions, feel free to contact me.
Fantastic. Thank you for your time, Marcel, and we'll be in touch soon.
Thanks, Mani, and meanwhile, stay safe and keep well, you and your family.
And to you as well. Take care. Bye.
Bye-bye. Thank you.